Welcome, everyone. Thank you for joining us, gentlemen. I'm excited for this conversation, as you all have noticed, being around Abu Dhabi the last couple of days, just the huge amount of development, construction, cranes everywhere, and a lot of it is down to the capital and operational expertise of some of our guests. So, Khalid, let's start with you. You're our host. Mubadala obviously invests all around the world, but Abu Dhabi is increasingly a destination for global capital. And maybe just discreetly, what is the pitch and how does the UAE differentiate itself from other countries in the region that have, frankly, fairly similar ambitions?
Good morning, everyone. Thank you for having me. I did not expect to start with this question. It wasn't even in the list, but I think it's very easy to answer. I think to understand the attractiveness of Abu Dhabi and the UAE in terms of becoming a destination of capital, you need to understand its history. And I always like to talk about this story, which is when the UAE started in 1971, the late Sheikh Zayed, the founder of the UAE, basically, the UAE was, was small coastal town, made up of small coastal towns, trading on pearl, trading on small-scale agriculture, and there was no infrastructure whatsoever. No public institutions, no hospitals, no schools, no infrastructure. And the focus of Sheikh Zayed was mainly to build the right infrastructure for the country, including public institutions, hospitals, roads, ports. And his strategy of execution was very hands-on. He was super hands-on. He used to oversee every single major project personally. And then towards the end of 2000, when Sheikh Khalifa became the president, his son, and then Sheikh Mohammed, the current president, the foundation is already laid. Infrastructure is already laid. Everything is ready for them to start thinking about what is next, how to build an innovation-based, sustainable economy. And when you hear bets today here in Abu Dhabi, like the AI bets, and the climate, the decarbonization initiatives, the renewables, etc., it's all driven from the fact that everything was laid and the current leaders had all the time to basically think about, what to do next and how to take the economy to the next level. And throughout history, consistency in execution, clarity in policy, visibility into the next 10 years, 20 years was quite common and dominant. And for capital today, that visibility and that policy clarity is very crucial. And it's becoming an edge for Abu Dhabi and for the UAE today. And that's why you have a lot of capital flying to the UAE, a lot of asset managers setting up shops presence in the UAE. And I remember in the past few months, a lot of companies came and set up their offsites here and their board meetings, etc. I think that's the main driver. It's understanding the history and the consistent execution.
And then as you think about, because many in the audience and some on stage, want to partner with the huge investment funds here, how do you think about partnerships, co-invest, sort of where that conversation has gone over the last couple of years?
I think if you look at the partnerships over the past 20, 30 years, it has evolved in a big way. I remember 20 years ago when asset managers used to come to Abu Dhabi, and Sada, I'm sure you remember that. When you meet with asset managers as a principal investor, the first 2 to 3 minutes, they will greet you. And then the rest of the hour, they're going to go to the pitch and start presenting the fund. And they're going to end up the meeting with, this is how much we expect from you. Now, 20 years later, they will spend maybe 99% of the meeting just talking about how we can work together, how we can collaborate, how we can add value. I think that definition of partnership has evolved from becoming a passive GP-LP relationships into more of the co-architects of deals together, where we work with GPs and asset managers early on, engage in co-investments, co-underwrite. That was one of the evolution. But the second was, it's no longer about seeking returns. It's more about mission driven. So they join forces to tackle a big problem. They join forces to set up energy platforms, to set up data center platforms. So it's more about the mission rather than one single one-off transaction.
Raj, you're nodding. Does that ring
Yeah.
true?
Absolutely, and I actually think that the region, I would say there's probably been 3 stages, Khaled, over the last 20 years.
Raj, can you bring the microphone
Oh,
up a
sorry.
little more?
I totally agree, and I think there's been likely 3 stages in the last 20 years. For sure, 20 years ago, it was about coming to the region for capital. I think, especially in the last 5 to 10 years, it's been a lot more about seeking investments in the region. You have a very stable US dollar base, great governance, high growth, $2 trillion of GDP. And I dare to say, in the last couple of years, it's been about partnership. It's piggybacking on the vision, the clarity that the region has, looking forward 10 years, 20 years, and partnering that with origination, the depth of capital, the patience of investing, together enabling us to do things that we could not do standalone. And I think that's really what the next phase is that's just getting started right now.
Max, CPPIB is a large Canadian pension fund, similar to some of the sovereign funds in the region, invest effectively forever, very long-term capital. And curious, as you're looking around the world, I think you're based in Europe, and maybe you can give us a little bit of a view kind of on where you see the opportunities and the time horizons for some of these really big, ambitious projects.
So first of all, thank you for having me. The way we look at the world as a place to invest is through 2 lenses. One is the lens of time, which is we invest for the long term. And whilst there is geopolitical instability, there is political instability, there's uncertainty, these things change over time. And we don't flip-flop in and out of short-term trends or short-term situational investment circumstances. We take the long view. And that is why we very often regularly partner with the best in the world. And we look for those partners that align with taking the long view, looking through that short-term volatility. The second lens is lens of relative value. We get paid for risk as investors. And in the world today, there is no risk-free place. It depends on how much risk there is, how long-term structural that risk is, and then what we're getting paid for it. Now, there's very few places in the world where we will not play, at least not at the moment, because the risk is simply considered too large. In most other places, it's a question of, do you actually get paid for the risk that you're taking? And then very importantly, do you partner with the best, often local partners that help you navigate that risk, both in assessing and then managing through that risk?
Sadek, you've been investing in the region a long time. And, when the big challenge is, of course, this huge pivot from an oil-driven economy to a much more diversified, export-driven, tech-driven economy. You've invested sort of throughout the cycle. Where do you think we are? What inning is the region in that transition, and what's needed to kind of to close the gap to where they want to be?
First of all, thank you for having me. But I just want to pick up on a point that Khaled made, which I think is extremely important, which goes to the heart of the long-term strategy that a country like the UAE adopted, which is the development of its basic infrastructure and then effectively taking it to the next level. And maybe to add a little bit to your stories and the experience of UAE, in the early 70s, after the UAE was created as a country, Sheikh Zayed, rahmatullah alayhi, said that he wanted to build a large network of water desal plants. And at the time, the feasibility showed that you really needed one such facility. And he said, that doesn't make any sense. I want 3. And so people were a little bit taken aback because they said, I don't think you really need 3 facilities. At least it will take you another 20 years to use them. Of course, the fact is they were fully operational and fully at full capacity within 3 to 5 years. So I think there's several elements. You need that infrastructure, which is there. You need the vision, and that's extremely important. And I think that you're seeing it more and more in the region. I think Saudi is a good case in point, where that has changed quite dramatically in the last decade or so. And I think the third part that people, in my view, are not focusing on is not the capital. So as you said, big source of capital, people came, please invest in my fund. Now it's more of a partnership. But that all is around capital. I think what people are missing in the region is that if you look at the human development statistics in the 1990s, early 1990s, literacy rate in the region on average was about 70+%. Today, it's 99%. That is a major change. So I think what's the most attractive in the region, capital, but honestly, capital is available globally now in huge amounts. If you look at the United States, there's an abundance of capital, you can argue. I think what's extraordinary in the region is the development of its human capital, of the people. Their knowledge, their training is, in my view, on par, if not better than anywhere in the world. So what I'm more excited about is the people in the region themselves that really have achieved an extraordinary level of capabilities and capacity. And I think that's the most exciting thing. It's a young population. It's a highly educated population. It's a highly motivated population with the vision that the leadership has to be able to push that.
I think that brings us actually to AI. I think the UAE was just seeing some data the other day from Microsoft. It's the highest usage in the adult working age population of AI. Raj, maybe just starting for a second, is AI just going to be infrastructure? When we talk about infrastructure, are there other places that are interesting, or is this really where all of the blood is going in the real assets world?
Oh, like there's a lot that's interesting in infrastructure, but there's no doubt a massive opportunity in AI. I think if you look forward 20 or 30 years, you can get a lot of conviction that AI is going to have meaningful impacts on us, our economy, our society, our people, and that's going to require a tremendous infrastructure build out. So we actually don't get caught up a lot in, is there a bubble? Is there not a bubble? I think if I had to invest in that way, then something's gone horribly wrong. Like I won't be able to sleep well at night if I had to pick, is there a bubble or not a bubble? I've done something terribly wrong. But just like everything else has cycles, has good times to invest, bad times to invest, good valuations, poor valuations, there are places right now that make a lot of sense to invest in AI and in data centers and in connectivity and capacity. And there are places right now that don't make sense.
Can you give us one or two of each?
Right. Well, I think what you need to be cautious of is paying big multiples that require growth in a certain period to get your capital back. Right? If you're paying for the hope for growth versus paying for data centers under contract where you get your capital back, and that's something very, very different, right? That's one. Number two, I'll draw two extremes. On the one hand, you can invest in a single facility with a single tenant focused on training in a third-tier market, single large facility susceptible to disruption and events, much different risk profile than a tier one market used for inference in addition to training, where the territory and the power access has value beyond one customer, radically different risk profiles. And so I think it's a fool's errand to get into the debate. Momentum money will get into the debate. Is it a good time? Is it a bad time? Is there a bubble, not a bubble? Patient money with vision and a long-term will not get in debate. They'll recognize, like in everything else, there's good things to invest in and bad things to invest in all along the route. And that's, I bet, the patient capital you have on stage today focuses.
Yeah, can we hear from both Max and Khalid? You know, particularly when you look long term, one thing that we just don't know is how long lived these assets will be and how quickly the tech will degrade. So curious, sort of from a technical matter, as you're underwriting, how do you think about this generation of chips versus the next one, and this server configuration versus what might come after, and how you're sort of underwriting returns to that?
Yeah, thank you. I mean, not surprisingly, we're heavily aligned with Raj, what you just said. I think if you look at potential bubbles in AI, you first need to look at where will value accrue in the broader AI value chain in the long term. And I think there's some question marks around, are models going to be truly differentiated? There's certainly great value that can be generated on the application layer, but we're lucky, I'm lucky, I'm an infrastructure investor. And so certainly I personally, and we as a firm, believe that there's going to be lasting value created in the right areas of the infrastructure layer powering AI. Now, when you then, as Raj pointed out, look for these pockets of defensible long-term value, you need to look at differentiation. And differentiation often comes from not only a stable political regulatory environment, good underlying demand fundamentals, but also the scarcity of the assets that you're investing into. And so when you look at some of the key bottlenecks in the AI infrastructure layer, such as the right locations, where latency is a key consideration, obviously the right customers, and then power. I mean, power is often the key bottleneck to unlocking the AI opportunity. When you get those together, there's just a finite supply of those key infrastructure assets that can be built. And so when you look at these enormous numbers in terms of CapEx going into AI, seemingly, much of that is just noise. When you look at the actual execution of the high quality, truly powered key strategic sites and key locations with high quality counterparties, there's only so much of that, and we actually feel that is a great place, together with our partners, to deploy some serious capital.
Khalid, same question to you. I mean, you have a lot of capital and a mandate to invest globally, but also Abu Dhabi has huge advantages in energy sources and operating these big infrastructure assets. How do you think about sort of where Mubadala wants to be putting its AI chips?
I think when it comes to AI, I look at AI from a real assets angle. So nobody doubts today that AI is gonna, change every part of our life. We all know that AI needs compute needs power needs, data center, power needs energy, etc. But I think when things are moving at a very high pace, almost very blistering in AI, and there's a lot of hype, as a real assets investor, it's important to stay disciplined, to stay original to your roots as a real assets investor, which is about finding the essentiality in the services and the infrastructure that you need to provide to the AI revolution. So, and what makes me a little bit worried is when I see this hype, how you apply that trigger and stay disciplined. And so when we look at, for example, data center opportunities, we want to make sure that we continue to implement our investment principles of not going into data center opportunities where they're going on an aggressive growth from a contracted velocity basis. We like to go into data center opportunities where there is already contracted capacity. We tend to like the cloud part, which is the unloved part of data centers today. But I want to go into data center opportunities where if they don't win any additional contracts, I have 6 or 7 or 5% IRR based on the contracted capacity. And so this is how we kind of stay disciplined when it comes to investing in a space that's actually moving at a very high pace. But this is not new to anyone. I think AI is creating great opportunities in power and energy and cooling solutions and battery storage and backup solutions and hydrogen, etc. So there are a lot of great tailwinds behind these sectors, but I think what matters is staying disciplined. Speed is an advantage, but discipline is the moat.
Sadiq, do you see that discipline? One thing as an observer of the AI phenomenon, it's everyone wants to be in it, and to the point that Raj and Khalid were making, there's a lot of growth expectations baked in, which contrasts with basic infrastructure investment, which is all about offtake agreements and very conservative underwriting. Do you feel like you're losing deals to people who are less disciplined, perhaps, or a little more optimistic about the growth piece of this?
Yeah, you and I have discussed this many times. Now, losing deals is the least of my concern. I think for me, the most important thing is, to Khalid's point, is really avoiding. So, my number one objective, besides doing good returns, is also as part of that, avoid bad investments. If in that process, that means I may end up foregoing investments that ends up being actually good ones, I'm okay with that. And so I'm sure that's not what Raj meant in terms of we don't care about bubbles, but we should look for the long run. That is understood, and I would agree with that. But I think maybe what Khalid is saying is when there is the elements of a bubble, I think you ought to take a step back and look at your entry price. Because I don't care what you tell me, if you come in at a very high price, it really takes a long time to get out of it. If you had invested in the NASDAQ in 2000, a day before the crash, it would have taken you over 20 years, 2 decades, to get back to that number. So the point I'm trying to make is, I am not sure that there is in fact, I believe that there is no full understanding of what are the fundamental requirements that we need when it comes to building the infrastructure associated with the AI needs. For the reasons you talked about, technology is changing every minute. Power supply may or may not change, may be available, may not be available. And frankly, no one is talking about it, the use of AI. So I don't see a clear model. OpenAI has to require another $120 billion of investments in the coming 4 years to be able to get to their basic numbers. That's a lot of money. So I'm just hesitant, and I think what Khalid said is exactly right. Look at the basics, look at the fundamental returns, and if that means that you may have to forego something which has higher return but also very higher risk, fine, that's okay with us. As long as you have the overall possibilities and you have the ability to allocate capital across different sectors and different regions.
In the time we have left, I thought we could do a quick lightning round, which is that if each of you had $1 billion and a 10-year time horizon to pick kind of one subsector in infrastructure, what would it be? We'll start here and go down the line.
Oh, me?
Yeah, we'll end with the host.
In the region or globally?
Globally.
Well, you know what? Let me start with the region. I would invest in anything that has to do with increasing and improving human capital.
Compute for human capital?
Improvement of human capital. Education, education facilities. I think it's an extremely interesting area. You have a young population that is thirsty for that. As I was saying, you were able to increase literacy rate to 99%. What you need in the coming decade is an improvement in the quality of education to be able to deal with the global requirements. I think that's an extremely important area.
Okay.
So that will be my sector.
Max?
So I would, first of all, hard question to answer without knowing how these assets are priced, but I would invest in the most attractively priced relative value risk across the energy transition spectrum.
Okay. Raj?
Yeah, I don't, I would love to be direct, but I truly don't believe that there's any single geography or sector that presents the best opportunity. And similar, like my bubble comment's a comment that you could spend all day trying to figure out bubble or not bubble. I completely agree, valuations matter, but you can't paint the sector with a brush that says it's a good time to invest or a bad time to invest. There's always opportunity and there's always danger, right? And so I would invest in a high-performing, diversified fund.
Okay. My guess is KKR offers one or two of those. Yes. And Khaled.
First, I will build a digital twin for me, and then I'll give the rest to everybody here to invest on my behalf. I'll take some time off. No, actually, what I'm going to do is I'll try to find an opportunity that has the real characteristics of infrastructure, inflation linked, it's backed by contracts, offtake. It's a super essential service that's going to be there for the next 30, 40 years. An asset that can withstand changes in governments, changes in alliances, changes in different, geopolitical circumstances. Something that most likely will be very boring, but will make you at least 12% IRR.
It's always the boring ones. It's the fun consumer plays that get everyone into trouble. Well, this has been a fascinating conversation. Thank you all so much for your time. And I hope you all learned as much as I did.
Thank you.
Thank you.